Alrighty, folks, we got some very good inflation numbers last week. I would say 80% of them were better than expected. There was one that I keep pointing out that went the wrong direction. We will break that down more. But to have this conversation, we got the one and only Taylor from Life Goal Investments. How you doing, buddy?
I'm excited. This shocked both of us. We gave our projections last week, and the headline CPI number came in beneath both of our projections. A massive fall off a cliff, basically.
Yeah. And let's be very clear. You were more right than I was, or I was more wrong than you were. So I will take that because I've given it to you on the other side. So I was definitely wrong on this. CPI came down a full percent. It went down a full percent, 6 to 5%. Of course, we are talking about headline. But yeah, that was interesting, right? Expectations were 5.2 or 5.1, depending on who you look at. So even the headline number came in below expectations. So pretty wild. CPI headlines rolling over.
It'll be interesting to see moving forward. A big part of that was the fact that we had a massive move downward in energy prices, right? Oil was trading off in a pretty big way. And now, obviously, with the OPEC cuts and some other things that are underlying beneath the surface there, that's starting to move the opposite way. So do we continue to see a fall off in headline CPI, or do we get a little surprise shock higher based on some of the energy numbers that play out?
Yeah, actually, I called that. The day the CPI came out. I said, I'm going to call it right now. The 9-month, whatever it is, trend lower breaks next month. It goes higher because not only did we have the commodities rollover, we also had a monster base effect, right? Base effect was 1.2. A 1.2 fell off. The next one is tiny. The next two after that are, again, very large. So it may be only a one month bump, but I do expect CPI headline to be 5.2, 5.3, somewhere like that. But it will break trend.
Yeah, interesting. And I honestly didn't look back at the base effect versus a year ago, just comparing, there wasn't as big of a fall off in that particular month a year ago. So that'll be interesting to see, or not fall off, but increase. I guess we were increasing back a year ago. That's a really well suited point there, but bring up your other side of it because you've been really right on your core CPI conversation. And that was an interesting one because that didn't move in the same direction.
No, core broke trend. When you break trend in these kind of economic numbers, you have to pay attention.
Yep.
And again, from memory, expectations were for a 5.5, which would have been equal or flat. It came in at 5.6, so it broke trend. This is what I keep screaming and warning about. And I don't know if you can recall a time, but I want you to realize what we just said. Headline is 5, core is 5.6.
Right.
It is not traditionally above headline. So
right.
We are in that environment right now where core is above headline. And that certainly doesn't happen very often.
No, it doesn't. And the Fed has been very vocal about the fact they focus more on core than they do on headline for this very reason. Like this massive energy drop off in gas prices essentially is what caused this huge gap downwards in headline CPI. The core CPI is much less volatile. It doesn't bounce around up or down as much. And that was very indicative of what we saw this month.
Yeah. So core CPI is the one number that went the wrong direction. And unfortunately, is the number the Fed looks at the most. And again, why we will get a quarter point on May 3rd, in my opinion.
Yep. I have been stating that I don't think they should do it, but I do think that they will do it. And this is the confirmation I think that we need in order to see that. And then you move down the pike or up the pipe, I guess, a little further, and we got PPI, right? So what the producers pay each other, the input costs that manufacturers have, et cetera, that also came down as well. So that's another positive sign on the overall inflationary backdrop that we're in.
Yeah, I think I've said this and I'll say it here with you. I actually think May 3rd is going to prove to be one of the worst dates to have a Fed meeting, and this is why. A lot of the economic numbers that will start to report the banking crisis will start hitting the week after May 3rd.
Yep.
So they're going to be making opinions on data which was pre-banking.
Right.
And well, obviously we know lending is down, right? I think it was down $105 billion in 2 weeks. I mean, there's all these signs, but the economic numbers won't hit until May 10th.
Wow. Yeah. I guess I didn't look at that timeline, candidly. But it's a really good point where we just don't have that full encompassing data of how big of effect is this regional banking crisis that's playing out right now, and how much is that affecting, to your point, lending? I mean, it just puts sand in the gears of lending, and it calls into question, hey, can we afford to lend this out, or do we need more liquidity on our books right now in order to service withdrawals from depositors when and if they come?
Well, yeah, that'd go back to what Apple did in video number 1 today. That's not going to help the regional
No,
banks.
that's not going to help. Boy, that's not going to. This is like, I keep wanting to go back to it. I won't, but like, this is mind blowing type stuff. The
Yeah.
biggest company in the world.
Yeah, folks, if you don't know, watch video number 1 where Apple announced a new savings account paying 4.15%. Ask yourself, if you're not pulling out your Apple phone to start moving money around, I'm not sure what's going on. Pretty crazy stuff. But yeah, so inflation does seem to be rolling over again. I stand by the fact we will get this final quarter point, then they will pause. But a lot of things are starting to show slowdown. And if this banking crisis really turns into what I think it's going to be, we'll be in a recession. And, you know, the market still expects a cut, although I think rates have been trending up the last couple of days. Are people starting to realize the Fed is serious?
Yeah, you have seen some of the projections for cuts in the latter part of the year come down, or go up, I guess, whichever you want to look at it. Less of a cut than what was anticipated. But it's interesting. The market is still anticipating a cut, even though the Fed is vehemently saying that they are not going to cut. But out of the other side of the Fed's mouth, they are saying we do expect an economic contraction, a recession to hit. So they're kind of talking out of both sides of their mouth a little bit here, and we'll see which one comes through.
I don't know if you saw this, but Janet Yellen, obviously the Treasury Secretary and former Fed president, said credit tightening may credit tightening may not require the Fed to raise rates anymore. This is the Treasury basically begging, please don't raise rates anymore.
Please. It's funny how out of sync they've been. Remember back to the origination of this regional banking crisis, Janet Yellen said, I'm going to screw up the exact words. When she was asked, are you going to guarantee depositors? She said, it is something we're not considering, I think is almost the direct quote that she had. Whereas Jay Powell on the conference on the other side, it said, you should absolutely feel safe about your deposits. And it was two diabolically different
at the same
answers to
time.
the exact same question.
Yeah.
At the exact same time. It wasn't like it were weeks apart. They were the same day.
Yeah, same day, same hour. They were both in front of microphones. So again, folks, this topic's about inflation. It does look like it's rolling over. I think the May 3rd, unfortunately, is horrible timing. I think if the meeting was like May 17th, they will have more data about the impact of the crisis, which they won't have. So when you have core inflation breaking trend and going up, I think you get what you get. Taylor, where can people follow you?
Yeah, follow us at Life Goal Investments, both on TikTok and on Instagram. Thanks so much, Michael. Appreciate all the time on here.
You got it.